Good morning. It is Thursday, August 22nd. For anybody who wants to watch the live version, I've started with a countdown. I feel like kind of a big shot now. I've got the whitened teeth. You can see the teeth on the screen if you're watching. I've gotten the whitened teeth, and we're still in the process of whitening. So if I'm grumpy this morning, that's the reason. And if I've been grumpy for the past week, that is the reason. So if I've responded to you and you've taken offense, I blame the lack of sleep. You got to sleep with these damn trays in your mouth. And yes, I look gorgeous. Yes, this is the moneymaker, folks. This is the moneymaker. This is what makes me that money. But, I haven't slept well, so I took a sleeping pill last night. So I'm a little charged up this morning, not completely charged up. But it is what it is. But I did start the opening with the music. Yes, that song lives in my head as well, just as well as it lives in everybody's head. When I first put that out on the podcast, everybody was like, oh my God, tune in daily. Don't miss a single show. Oh, it lives in my head. Yes, it lives in my head as well. Talk about jobless numbers. Yesterday, we talked about how jobless numbers and jobs numbers are going to be the key to this. The Fed minutes came out yesterday. Jobless claims came out this morning. They're light. Less than expected, continuing claims highest since 2021. It's just a constant, hey, we've got good news and we're going to lower rates in September. Now, be careful, because historically, the reaction to lowering rates is not great over like the next month or so. But over time, and I'll read this stat to you as I go through my notes and stuff, but we were up yesterday. We're up in pre-market about 0.41. You can see the green candles. Where are we on the MACD? The MACD is turning over. The RSI completely oversold at 68%. What I want to point out to you is if you traded my 4-hour algorithm over the last 2 years, you had 21 positions in QQQ. You're currently in one. And I want to show you the great timing of this, okay? Remember during this time when we were going down, the algorithm was about even with buy and hold. Right now, you're making 56.6% return. And that is based on this current 10% move that you're seeing. But if you bought and held 2 years ago, you make 45%. What's my point? My point is we all have different risk tolerances. If you have a huge risk tolerance and you're able to add to it, just add when you want to, when the algorithm tells you to. Again, it takes emotion out of this, and it's back tested. So you can be sure that, hey, I'm getting a decent buy-in here. Even at 446, I wasn't 100% sure. I thought we were still going down. The news was bad. It was under the 50-day. The past couple of times we've been under the 50-day, it's been a good buy. I didn't believe it. But in my 4-hour algorithm, you've got to take emotion out of this, and it's a good way to dollar cost average your way into QQQ with some amount of safety. Again, past performance doesn't predict future performance, but it's a good way to add to something where you just sleep at night, and that's the key. You want my 4-hour algorithm, you can get it by going to Linktree, linktr.ee/dailystockpick. It will take you over to Trendspider, that top link. And then click on this, and here's the pricing. $53 a month. $53 a month. You can get my algorithm. And again, I point back to 2 years back-tested results. You're currently in a great run on this one. Yes, the MACD is up there. The algorithm doesn't have you out. Yes, the RSI is extended. Would I get out of this if I was selling? Absolutely freaking not. Because the algorithm tells me not to. I've talked about my trades in the past month or so. I've tried to time the algorithm with CrowdStrike. Didn't do well. I tried to time the algorithm with IWM. Didn't do well. Tried to time the bottom with Target. Didn't do well. So again, this is part of the process. Is I make mistakes just as much as anybody else. But I'm learning more and more that this is the way that I want to trade. So if you want to trade, sign up for Trendspider. It's a great one. Again, I had a great discussion with Fidelity yesterday. If you do not have a financial advisor and a relationship with one, message me. I'll hook you up with Stuart at Fidelity. He's great. And again, Fidelity provides you a financial advisor. Get one, establish a relationship. It's not just because I'm a high net worth individual. We talked about bonds yesterday because I told him about Bill, my discussion with Bill. If you listen to my podcast every day, you know my discussion with Bill, this 30-year bond trader that I got on the phone with the fixed income guy. And Stuart told me all their fixed income people are significantly experienced because you need to be in fixed income. When you take a financial advisor course and you take the registration, it's probably like 400 pages. I would say 399 is based on fixed income and bonds. One page is based on equities. That's it. So one thing we talked about is ETF investing and how my returns may make it sense to get out of even QQQ sectors may make more sense. And we talked about bond funds and specifically this FNBGX. And this is the long-term bond fund. And what he pointed out to me was, this is what's interesting. And again, this chart shows it to you. So the chart, this is FNBGX. It's Fidelity's long-term bond. So it's a 20-year. So when you look at the duration of the bonds in the portfolio, it's 15.27%. So if for some reason we have a rate reduction, look at during 2019 all the way up to 2020, when the rates were actually being cut, the bond fund went up. Okay, that was when the bond fund went up. When did the bond fund actually come down? As we started to see the likelihood of rates being raised. And when you see this big drop from 2022 down to 2024, that's the rate being dropped. Now, obviously, bonds don't react per se exactly, but their duration can be a kind of guide for you. And am I doing this? Probably not. It doesn't fit my profile. But what you want to look at is duration. And I can go into this with just, again, I'm a douche on the internet who heard this. I may be interpreting this completely wrong because I am not a bond guy. But if the duration is 15 years and the Fed cuts by 1%, a full point, they won't do that. Aggressive is going to be a half a point or a quarter point. But if we have 3 quarter points, that's 0.75. Your duration, if they cut a full point, your duration is the guide where the actual value of the bond fund will go up by 15%. You can use that as a general guide, okay? Use it as a general guide. And he was saying that, he was telling me, hey, long-term bonds are where you want to be. And I've heard that before. Am I doing it? Probably not. Probably not, but it's a great exercise to have with a financial advisor. And that's what I want to point out is have a financial advisor because they can look at your portfolio. I'm not a financial advisor. I'm just a douche on the internet. I'm a guy that helps you pick stocks. I'm not a financial advisor. You can't come to me and say, hey, what should I do with my portfolio? I will tell you, I have no clue what you should do with your portfolio. I don't know your risk tolerance. I don't know your age. I don't know your timeline. I don't know anything about your income. Again, I just don't know. That's why you want to establish a relationship with a financial advisor. It helps. You don't need to pay for one. Fidelity provides one for you. So again, have this relationship, establish it, get it. They're not going to sell you anything. And if they do try and sell you something, they're not a good financial advisor. That's the point. If you can establish one with somebody that can charge you, 1% of your portfolio and stuff like that to manage stuff. But, I manage my own portfolio. Stuart just gives me some guidance, and it's a great, great relationship. Now, we talked about things going up and down and, where are we in this? I'm waiting for a pullback. You can wait for a pullback. Here's some numbers from Christos. I think that's how you sell it. Christos V. From Substack and my weekly stock pick, he had mentioned this, so I put it out there as well. And I think this is a great stat. 94% of the years, the S&P corrects 5%. 64% of the years, the S&P corrects 10%. Okay, so 64% of the time, we have at least one time where you're down 10%. 5 to 10% corrections are normally in healthy markets that continue higher over time. If you're lucky enough to see 15 or 20% corrections, it's an even better opportunity to take advantage of allowing you to increase and your compounded returns even more over time. What does that mean? That's buy the dip. That is buy the dip, okay? That's what the algorithm tries to do. It tries to buy the dip. Does it get it right 100% of the time? No, it gets it right 48% of the time. Okay, 52% of the time in QQQ, you lose. But the average win is 7.81%. The average loss is 2.52 for 2.59. If you just dollar cost average and buy this each time it tells you to buy it, say you have $10,000 and you just put $1,000 in each time the Qs tells you to buy it, more than likely you're compounding your returns. Again, you're compounding your returns. That's the key. So, I heard a stat, and I'm going to go and look at this up in Seeking Alpha, but I heard a stat, and it's about the VIX, and it's about the volatility that we've seen in the VIX. When the VIX spikes like what we saw, and we'll look at a 5-day of a 1 month. A 1 month, because when the VIX spikes the way we saw it, and you can look at that 1 year and you can see exactly where we saw. When the VIX spikes, you rally afterwards. With an average return by the next summer, the S&P will be up a certain amount. Now, I didn't write down the certain amount, but this particular advisor said, hey, the S&P will be up at 6,000. 6,000. That means SPY will be at 600, okay? Because SPY tracks the S&P by 10, and it's exactly. VOO does not. I suggest you buy VOO for the long term, not SPY. SPY is more for options. It beats it by minimal amount of points. So check your fees, check everything else. But I predict that we're at 560. Okay, so that's like an 8% move, 7% move. If you were to take the mean average of these rallies, it puts you at 6,300 on the S&P, which would be 630. Which makes you move 90 points, which is almost 20%. Do you want to buy now? Well, the RSI is really high up there at 69, almost 70. The MACD super stretched. We've had this crazy move since we had that Japan unwind trade just 2 weeks ago. I don't think it's time to load back in. If you're dollar cost averaging and you buy every Thursday or Friday, continue to buy every Thursday or Friday. Even on SPY, say you're doing options on SPY. Don't do 0-day DTE options, but you're doing long-dated options. My algorithm on SPY, just so you're aware, in Trendspider, 39.1%. What do you get when you backtest it for 24 months? You get 30%. That's a pretty good return, again, for just buying SPY. So it was a crazy day yesterday. With a revision in jobs numbers, the market got taken down. But when the Fed minutes came out and it showed that most likely that we're going to cut in September, I think September's priced into the market, and any move that says, hey, they're going to cut into a recession is going to bring the market down. That's why the jobs number yesterday, the revision in jobs number, brought the market down. But then when it said, hey, we might reduce in September, but the economy's good, again, that kind of boosted the market. So you're in this kind of middle play. And yes, it's confusing for even the best analyst out there. Not everybody's Tom Lee who says, IWM's going to triple by the end of the summer. Not everybody's into that. So again, you've got to make sure what is in your mind. Don't sleep on XLU. The XLU bounce, like we talked about at the beginning of the year. This is from Seeking Alpha. And again, if you have Seeking Alpha, if you don't have Seeking Alpha, you can get it. You click on this second link. It's $25 off your membership, free 7-day trial. But this screenshot right here is from Seeking Alpha, okay? Technology, year to date, up 17%. Communication services, XLC, up 20%. Okay, financial services, XLF, up 16%. Industrials, up 12%. Consumer staples, up 13%. Healthcare is up 13%. Healthcare was lagging. You know what else was lagging at the beginning of the year? It was utilities, XLU. We talked about how XLU was at the bottom of this channel, how it needed to. It has now come up to be the second leading sector year to date. Okay, over 1 month, you're up 7%. Energy is down 3% over 1 month. It's only up 5% year to date. Energy names, I'm not exposed to energy names as much as I was. I just sold Occidental Petroleum. There's a lot of chatter about Occidental Petroleum being out of Warren Buffett's portfolio, in Warren Buffett's portfolio, and not really doing anything. But Berkshire hit a 52-week high, an all-time high, I think. So again, understand that I don't think that this XLU thing is done. I think with power, you're going to have the utilities. Well, what do you want to do? You can go over here to Seeking Alpha and you type in XLU. And let's see what the leading stocks are in XLU. You just go to holdings. The momentum's an A. The quant gives it a buy. NextEra Energy. This one is probably one of the best utilities out there. The quant says hold. Wall Street says buy. Now, this has been 18% up 1 year. Now, let's take a look at the quant. The quant has had it as a buy when it was down in the 60s. It's at 79 right now. When you look at Wall Street and they say it's a buy, we can take a look at it. 23 analysts, okay? It's split across the board. 7 hold, 7 buy, and 8 strong buy. 1 is a strong sell. What's the average price target? $82. That's not a big enough gap for me to say, okay, I'll buy it. I'll buy it. You may want to buy one of the other beaten down sectors, but use that sector map as a guide. Use it as a guide. XLK, one of the things that, this one in particular, risk reversal, I'll put this in the newsletter. The newsletter's free. It's at dailystockpick.substack.com. You can get it for free during the week, and I'll include this clip in that one. And this clip is the exact reason why I want to hold single stocks, and it's just really good. Even the Qs, it makes sense to hold single stocks. Well, single stocks or sectors, whichever one you want. I think I think it's a great clip to watch because Dan Niles, I've posted about his Twitter before. He's a great one. Yesterday, let's talk about some of the stocks. Went over Uber. Uber got an upgrade to strong buy. Now, when you sign up for Seeking Alpha, you import your portfolio. You can sign up for the Savvy Trader portfolio here at, this is the core portfolio at Savvy Trader. You can track these stocks. I have this imported into Seeking Alpha Premium so that I can look at these stocks. We can take a look. It's 35 positions. 35 positions. Okay? We can compare the performance against the Qs, because the Qs, again, do you want sectors? Do you want individual stocks? You want to compare yourself against an index, and Savvy Trader allows you to do this. Well, the Qs are up 17% this year. This daily stock pick core portfolio is up 34% this year. Okay, that's just year to date. But again, you can follow it. I've got this portfolio loaded into Seeking Alpha, and Uber got an upgrade. Uber got an upgrade from a hold to a strong buy. Hold to a strong buy. It's up 0.27. I sold out at 70. Okay, camera was freezing. I got that word, so we mixed this in. Uber. Here's Uber. Buy in at 65. Algorithm makes you 66%. The actual performance chart, it makes you 128% to buy and hold. I, in particular, sold this one at 70. I wasn't 100% sure that this one was going to actually move up. So I sold it. Just my mistake, but it's a strong buy now in the quant. The only issue is the valuation. The valuation, when you take a look at it, it's based on, even the PEG ratio going forward is fine. It's under 1, but they're going to need to continue to grow. So again, when you import your portfolio into Seeking Alpha, it gets in there. Now let's talk about semis. Oh, one that I want to bring up, MHO. MHO that I brought up prior to actually recording the podcast. We brought that up and I said, boy, this looks good. And it's MI Homes and the symbol is MHO. The algorithm bought you in here at 148. You were trading yesterday. You opened up at 150. I said, the difference between 148 and 150 isn't horrible. It's now at 154. So you had a nice little run up yesterday. In pre-market, you're at 153.54. The MACD is low enough below the oscillator. The RSI is a little bit extended at 61. But when you look at the weekly on this one, it does look like we pulled it back a little bit after their earnings. But again, we all know any reaction to earnings is an overreaction. So the downside, you might be going back to 173. Now, let's take a look at MHO because it's an alpha pick. Now, if you want picks like this, again, the third link on Linktree, linktr.ee/daily stock pick. It's down here. Third link, alpha picks. Want to beat the S&P? It will take you to this page. You get $50 off. It is a portfolio. You get a stock on the 1st and the 15th of each month, and they tell you when to sell. They just told you to sell Meta. They live by strict rules about the quant, and you get access on day one to all of it. If you don't know how to invest in fundamentals, you have two choices. You can get Seeking Alpha Premium, or you can just get hand-fed this portfolio. And part of this portfolio is MHO. When we go to MHO and we look at it, it's a strong buy. Seeking Alpha analysts say it's a sell. When you take a look at this, the PEG ratio, they don't have a forward PEG ratio, but it's 1.16. It's not horrible. This is a home builder, consumer discretionary. It's ranked number 4 out of 24 in their sector. The valuation's not bad. Look at the PE. It's 8.4. It's a strong buy in the quant. You look at the growth. It's a C. Their revenue's not growing, but their free cash flow, their working capital growth, 13%. CapEx growth, 7%. Now, levered free cash flow, they're using their money to grow, down 62%. So could be, when you look at Wall Street and we look at this one, $154. The price target on this one from Wall Street is $182. Be very careful with that price target. Yes, it looks juicy, but there's 2 analysts covering this. There's only 2. So take it with a grain of salt. They've run this one up as we've gone there. I would say probably 150 is not a bad one. If you want to go to 170, from 150 to 170, this might not be a bad one to actually look at. If we look at other ones in this sector, you can see KB Homes, number 1, Green Brick Partners, number 2, Meritage Homes, number 3. So I took on MHO. Now, semis, this one's an interesting one. This is from Trendspider. Okay, Trendspider has these charts on the semis. Is it fireworks tomorrow? NVIDIA, AMD, Micron, LRCX, SMCI, and Qualcomm. Again, they've been setting up. That's a whole lot of semiconductor stocks that stayed inside and closed green. Inside candle and closed green. That's usually pretty good. And we're 1 week away. This was if you want to watch just Jensen Huang being Jensen Huang, this is how he's going to be on the earnings call next week. This is Jensen Huang being Jensen Huang. So let's see where we are with NVIDIA. NVIDIA on the chart, and I do realize my camera is freezing, so my apologies about that. I'll fix that in tomorrow's, but NVIDIA chart, it will all be in the newsletter, so don't feel like you're missing out on anything. Everything's going to be in the newsletter. You can follow along. You can literally just scroll up and down as I go through this on my newsletter. You can scroll up and down and see the charts that I include, or get your own charting system. Exactly, what you need to do. NVIDIA, the MACD crossing over, looks like it's moving down a little bit. We talked about 130 being a resistance level, putting up a little bit of resistance up there at 130 again until we get to earnings next week. Lord knows what the earnings are going to tell us. But when we look at a weekly chart on this one, it still looks extended, even though, again, I point out the weekly times when it's gone under that 9 and 21 in the past, it's been a good sign, but we're just going straight up. The MACD still super high. The RSI has come back down to reasonable levels at 67. Still not great. Reasonable levels, I say. But again, this is Jensen Huang being Jensen Huang. So if you want to take a look at that, that is what that is. FYI, Palantir's CEO came out. I don't know if this is old news. I just heard it. I didn't know he was going to take a stance like this. He came out. He said he's voting for Harris for president. So, I don't know if that changes your investment thesis. This is a government contractor. He's voting for Harris for president. Donald Trump may take some revenge because we know the revenge tactic is a tactic that he loves, but he may take a revenge tactic. He's never been, the Palantir CEO, Karp, has never been shy. I like him a lot. Honest to God, I like him a lot. The beauty of this, though, is that Palantir's main funder is Peter Thiel, who's a huge Trump supporter. So what's nice about this is, Karp feels free to put out his political stuff. I just like this company more and more. The valuation's the only thing that's the problem. It is in the core portfolio. It does have a great record of just buy and hold. So I like this. Let's talk about Schwab. So what I did was I went over to FinViz, and every morning I'd take a look at this and I say, okay, where are the big sales and stuff? And Schwab had a huge sale of $1.3 billion proposed sale. Huge sale. So I went over to Seeking Alpha and I took a look at some of the news because it said read the notes. And it's this TD Bank Group. Okay. They took a provision of $2.6 billion in order to pay for a bank secrecy anti-money laundering program. The U.S. authorities have them. So it's a fine. It's a fine. TD said it sold 40.5 million shares of Schwab common stock, reducing its ownership to 10.1% from 12.3%. The bank has agreed not to sell any more Schwab shares for 45 days and has no intention of divesting additional shares. Bloomberg reported that TD is offering the shares at $61.35 and $62.65 each, which will result in proceeds of That means that Schwab is capped at that $63. Until this sale gets through and is in there, it's capped at $63. I would expect that it moves up after this. I like this bank. Again, I think it's an $80 stock. We've seen it right before their last earnings. It was here at 75. It got up to 80 in May, and then it's been down. I think this move down is just an opportunity for you to get in. Wait for confirmation. Right now, the algorithm has you in at 63. But it looks like the MACD is going to close down. You're going to get a better opportunity to buy this, I think. Now, the algorithm makes you 37% over 2 years on this versus losing 13% over 2 years. Your average win, 9%. So again, the algorithm works on this one. I like this. Now, let's talk about Snowflake. Snowflake earnings, I have this one. It was a good quarter. The problem was 30% growth year over year. They raised guidance. It was good. Not good enough. The margin erosion was bad. So let's take a look at where Snowflake is going to open because it's going to be down significantly. Again, I have a very small position in this, and it's about 180 was the price. You're trading at 120 right now. It was a good quarter. But again, the valuation is really bad on this. Now, this candle right here, the low is 107, which means recently you could go as the low as 107. But the quarter was good. The issue is the valuation. While it was a good quarter, you're down 10% in pre-market. You're down in the actual market because the market's opened. Snowflake right here down 10%. It's the margin. The valuation right here, it's a D. And I went over this before. They had to blow it out of the water because the PE is at 148. That's just too big. When you look at the growth, they have to grow. It's not enough. So again, they went over how a lot of this wasn't their fault, blah, 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 the whole thing. It's just interesting. I'm at some point, I'm probably cutting my ties on this one and just waiting for a better entry. But with the 4 hour, I want to make sure that I'm just doing it smartly, just based on those things. But it's not a huge position. Again, it's a very small position. You see that gap up there between 124 and 129. You can probably trade it. The algorithm had you in at 121. You're trading at 120. So it's not a horrible thing if you bought based on the algorithm. It is a horrible thing if you bought based on the algorithm over the past 2 years because it does lose you 49%. So again, I think this slide down is indicative of, hey, we're in a weak stock in this one. This is the reason why I took this one out of the core portfolio and put Palantir in. I think Palantir was a bigger winner. It was very clear over the past, a year and a half since I took Snowflake out of the core portfolio. Just FYI, Bitcoin It reached its fear and greed index hit recently. Fear. Typically, when that does happen, levels, we reach the bottom in the price. Bitcoin is up over 60%. Again, Bitcoin's up over 60%. What I found funny was yesterday, McDonald's Instagram was hacked, where it pumped and dumped Solana with the Grimace coin. Okay. These people pump and dumped the Grimace coin to make $700,000. $700,000 in a matter of minutes. This is from 8:15 to 8:17. They hacked it. They said the Grimace coin was going to be huge, blah, blah, blah. They hacked it to make $700,000. Don't be one of these people. If you have money and you're going to buy Grimace coin, just make sure you know what you're buying into. But Bitcoin is up over 60,000 again. I like it. Let's see. Michael from Instagram. Hey, Gary, thanks for the awesome podcast. Was wondering if you could compare Zscaler and CYBR. And what's your opinions of Zacks rankings? I think Zacks rankings is the same as most of the other ones. I think they're okay. Look at the performance. I was never a fan of Zacks. So when I was reading FinViz, I was never a fan of Zacks. It always seemed like it pumped the cheap ones and never did the other ones. But let's see, CYBR, CyberArk Software, and Zscaler. I don't know anything about these companies. Let's just compare them. I mean, here you go. 1 year, Cyber's up 81%. Zscaler's up 40%. I would take Cyber. If you hit a time machine, I take Cyber. I don't know anything about these other ones. We can look at Zscaler, their peers. Is Cyber even in here? Let's see. Cyber's not even, it's at the end. Okay, it's at the end. So we'll take a look at Zscaler, CrowdStrike, PanW, Fortinet, Checkpoint Software. You can look at these ones, okay? Price return. Let's look at total return. Let's see if the chart will redo it. There you go. Total return over 1 year. It looks like Cyber is up 82%. That's the big winner. It's a strong buy. Cyber's a strong buy in the quant. It's a strong buy from Wall Street in the quant. Zscaler is a strong buy. It's ranked number 2 of 46. Cyber's number 48. And again, these are just quant ratings. So you can take a look at the quant rating of the two. I do own PanW and I own CrowdStrike. My dad owns Fortinet. So I don't own Zscaler. I don't own Cyber. When you take a look at their PE, their valuations, Zscaler 66, Cyber's 122. When you look at the PEG ratio, Cyber doesn't have one. Doesn't look like Zscaler has one either, so I can't do it on that. Revenue growth year over year, Cyber's 30%, Zscaler's 37%. I mean, Zscaler looks like the value play on this one. Gross margins, Zscaler's 77%, Cyber's 80%. So 1 month performance, look at, Zscaler's got some up and downs. Cyber's just straight up. So, again, if you want the value play, I think Zscaler's it. If you want the actual momentum play, I think Cyber's it. But other than that, I don't know anything about it. As cybersecurity, I don't think you can go wrong in any of these. CrowdStrike, PanW, Fortinet, Cyber, or Zscaler. Checkpoint, I know nothing about, but I don't think you can go wrong on any of these. A comment from the newsletter yesterday. Chris, outside of 2 recent buys you've gone over, Dell and GM, this looks juicy for September Q4. Have you reviewed Duolingo recently? I haven't. Here is his chart from TradingView. I don't think this tells me much at all. It's just a chart. TradingView, it doesn't have moving averages. I don't want a free 30-day trial. This doesn't tell me a hell of a lot. This doesn't, if you're looking at this chart and this is what you're basing your trade on, I don't know exactly. The MACD's up here. I don't know what the blue, oh God. This is why I want a Trendspider. TradingView just had ugly charts. But I did reply to Chris that I watched this video and I haven't watched it all the way through, but I've changed my mind on Duolingo. Duolingo rakes in $500 million a year with 80% of its users that don't pay. So I haven't changed my mind on the valuation of Duolingo, but I have changed my mind on they've got a ton of users that if they could turn into paying customers, it could be a huge boost for the stock. Now, over 2 years, my algorithm makes you 104% in this. You make 97% buying and holding. So it's not a bad one, buying and holding. Just got you in here at 169. Boy, don't you wish you bought, because it's at 211. You've got a gap up here to 243. I have not gone over this one, but based on that Wall Street, and I'll include that in the newsletter, but based on that, I would say that this one does look juicy. It does. It interests me. But the valuation of Duolingo, when we go and look at it, it's a little bit stretched. When you look at some of these big movers that have done great things, they always seem a little bit stressed from valuation. But Stuart and I were talking about from Fidelity, valuation may not mean that much anymore, because again, stocks trade so quickly. When you look at the quant, it's a hold, and it's based on valuation. That's the only one where it's based on. Again, a hold is based on the valuation. They don't have the peg value, so they don't put growth forward. When you look at profitability, it's an A, because their margins are 73%. When you look at growth, their revenues year over year, 43%. The sector's going up at 2%. So again, it looks good. It looks juicy from a chart standpoint, and it's got that gap up there on the 4 hour, and the 4 hour does provide you a good return. So I agree with you, Chris. It does look juicy. Does it fit into something that I'm going to look at? No. This would be 100% a trade for me, not an investment, because it just doesn't fit my profile of big cap tech. So outside of that, that's what I was looking at. Now, AJ, Maro looks like it's resetting right as Bitcoin jumped from 58 to 61,000. Bought it at 1580, going to add to it today. I wrote back to AJ. That's a comment on Substack, again in the chat. I wrote to AJ, I think the Bitcoin miners have changed, and I think trading the Bitcoin miners is still okay. But you've got to understand, I don't think the volatility continues in this name. And the reason I say that is I think they now have moved from trading with Bitcoin to actually trading on their own. And that's something that you don't want if you're trying to trade Bitcoin around the miners. And so here's a year-to-date return of Mara versus Bitcoin versus IBIT. Bitcoin is up 37%. IBIT, which is an ETF, is up 31%. Mara is down 24%. And you can see Mara has gone down significantly more than Bitcoin or IBIT during this time when Bitcoin went down. I think they need to turn into a power play for AI. And we went over that before. But I think that's where Mara and the other Bitcoin miners play. I think you can trade it. And obviously, if you're in at 1580 and you're at 17,450 today, you're doing really well. Again, 1590 was the algorithm buy-in. So I'd play it out. Here's the thing. The algorithm makes you 65% over 2.5 months. Or 24.5 months. You only win 34% of the time, but your average win is 31%. That's where Mara gets you. So if you're trading the algorithm, you wait for that. You have confirmation. You make 65%. If you bought Mara and just held it 2 years ago, you're down 2%. So I don't think it's a bad one to trade. Just to understand, I do think that it might have changed. It might have changed. And that's all I'm pointing out. Now, scans. This is where my 4-hour algorithm gets you in. I include the scans every day in the newsletter. These are bullish stocks. So if you just pull up the newsletter and you just scroll down to the bottom, there are scans, and they're broken up into different sectors, different things. The main one is the top one. Those are individual stocks. Then there's income ETFs, energy, leveraged ETFs. There's Bitcoin and crypto today, because we did get a cross up there. You've got J&J, ADP, O'Reilly, AEP, and one that I want to bring up that's interesting is AT&T. And the reason I bring up AT&T, it's been dead money for 30, 40 years. This is not a stock that you've wanted to own over that time. But recently, it's gotten a run up. And my belief is it's gotten a run up because rates will get reduced. This has a forward yield of about 5%. When this one's running up and the rates are coming down from 5%, people will load into this for that dividend. And I think the dividend is what you want to invest in this one. But I don't know that it's got a huge enough turnaround that you could actually buy it. Because again, look at the past couple of times on the weekly, back here in 2019 and back here in 2021, where it crossed up on the 200-day. The 200-day never turned positive. The 50-day did turn positive during that run. It did turn positive during this current run. You do have confirmation, but you want to be careful. The RSI is at 66. If you had seen this one when it was trading at 17, great. The 5% dividend, you've been paid it. And you got this nice run up. But I wanted to point this out because, again, because the dividend is so critical to this, you could probably get into this while the rates are falling. So my apologies for the camera freezing if you're watching. I don't think the audio was specifically affected, but it does freeze. I'm going to fix it today. I don't exactly know what happened with OBS, but I'm going to fix it. I appreciate you putting up with the technical difficulties. Again, if you have any questions, hit me up. Everything's here on Linktree. You can buy it. I was playing with Webull yesterday. I love that app. I love, that took the place of my sports betting. The Savvy Trader stuff, it's all here. Okay, I'll talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.